Historic shift. 2 EU nations join BRICS, reshaping global alliances and, in April 2025, the global financial system was rocked to its core, sending shockwaves through boardrooms, trading floors, and government offices around the world. This time, the tremor wasn't caused by war or natural disaster, but by a bold and calculated move in the world of international finance, one that few saw coming, but everyone felt. China, the largest foreign holder of U.S. debt and a key player in the global economy, suddenly dumped a massive amount of its U.S. Treasury holdings onto the market, catching investors and policymakers off guard. Markets from New York to Shanghai reeled in real time, as the decades-old financial relationship between the world's two largest economies entered a dangerous and unpredictable new phase. The world's trust in U.S. debt, the so-called safest investment, was shaken to its foundation, as investors scrambled to reassess what was once considered unthinkable risk. This wasn't a slow, quiet shift. It was a headline-grabbing event, unfolding in a matter of hours and timed with a sharp escalation in the US-China trade war, amplifying global uncertainty. Beijing's message was unmistakable. Financial leverage is now a weapon, and economic decisions can be wielded with the same force as diplomatic or military actions. The US was forced to suspend new tariffs in a bid to stabilize the situation, but the underlying tensions between the two superpowers only deepened, leaving allies and rivals alike on edge. The sell-off exposed deep vulnerabilities in the American economy, rattled global markets, and accelerated a worldwide move away from the dollar as the default reserve currency. April 2025 was a wake-up call for the entire planet, a stark reminder that in today's interconnected world, economic policy is inseparable from geopolitical power, and the balance can shift in an instant. To grasp the April sell-off, we need to understand the US-China financial relationship. This relationship has been a cornerstone of global finance for decades, influencing everything from interest rates to international trade policies. For years, China's trade surpluses were recycled into US Treasuries, keeping American interest rates low and funding US deficits. This massive investment helped stabilize the US economy while providing China with a secure place to park its vast reserves. This arrangement benefited both sides, until it became a source of mutual vulnerability. The interdependence meant that any significant move by one country could have far-reaching consequences for the other. If China dumped its US debt, it could destabilize the dollar and spike US interest rates, but it would also hurt itself. The financial repercussions would be felt globally, causing market turmoil and economic instability. This balance of terror kept both countries in check. Neither side wanted to make a move that could trigger a financial catastrophe. But by the mid-2010s, China began quietly reducing its US debt exposure, diversifying into gold and other assets. This strategy was aimed at minimizing risk and gaining more financial independence. By late 2024, China's Treasury holdings had dropped to $760 billion from a peak of over $1.3 trillion. This significant reduction was a clear indication of China's shifting financial strategy. The market absorbed this slow shift. Investors and analysts had time to adjust to the new reality, preventing any immediate panic. What made April 2025 different was the speed and scale. A sudden, tactical move, not a gradual strategy. The abruptness caught everyone off guard, leading to a rapid market reaction. The sell-off was a clear signal. China was willing to use its financial leverage. This was a bold move, demonstrating that China was ready to challenge the existing financial order. The world saw that the old rules no longer applied. The financial landscape had shifted, and new strategies were needed to navigate this complex relationship. The US dollar's dominance was no longer guaranteed. The global financial system was entering a new era of uncertainty and change. The global financial order had changed overnight. The implications of this shift would be felt for years to come, altering the dynamics of international finance and trade. The April sell-off was years in the making, fueled by escalating US-China tensions. The trade war that began in 2018 set the stage, with tariffs and hostility becoming the new normal. In April 2025, the US shocked markets by hiking tariffs on Chinese goods to 145%. China hit back with 125% tariffs on key US imports. Markets panicked, and in the chaos, China began dumping treasuries. Yields on US bonds soared, signaling a massive sell-off. The spike in borrowing costs threatened the US economy. Facing a financial crisis, the US administration quickly suspended the new tariffs. Beijing had demonstrated its financial power and forced a US policy reversal. The world saw that economic weapons could be just as powerful as military ones. The balance of power had shifted. The week of April 11, 2025, saw an extraordinary wave of selling in the US Treasury market. It was a week that would be remembered as a turning point in global finance, as panic and uncertainty swept through trading floors from New York to London and beyond. China, through its central bank and state entities, unloaded tens of billions in treasuries in just a matter of days. The scale and speed of the sell-off caught even seasoned investors off guard, sending shockwaves through the global bond market. The timing, right after the US tariff hike, was designed for maximum impact. It was a clear message. Economic retaliation could be swift and severe, and the world was watching every move. Bond prices plunged, yields soared, and the dollar weakened as capital fled the US. The sudden exodus of money from American markets left traders scrambling to reassess risk and find stability elsewhere. Investors rushed to German bunds, signaling a search for new safe havens. The move highlighted just how quickly global capital can shift when confidence is shaken. The sell-off shattered the perception of US assets as untouchable. For decades, Treasuries had been the world's ultimate safe investment. Now, that certainty was gone. The feedback loop of tariffs and selling threatened US financial stability. Each new headline fueled more fear, and every drop in the market made recovery seem further away. Analysts declared, "The market has lost faith in US assets." The phrase echoed across newsrooms and trading desks, capturing the mood of the moment. This was more than a Chinese move. It was a global loss of confidence. The ripple effects were felt in every major financial center, as investors everywhere questioned what might come next. The sell-off was a physical rejection of American economic leadership. For the first time in generations, the world's trust in the US financial system was openly challenged. The world's financial center had been shaken. The sense of invincibility that once surrounded Wall Street was gone, replaced by anxiety and doubt. The consequences would ripple for years. Economies, policies, and investor behavior would all be shaped by the events of this week, leaving a lasting mark on global finance. Trust, once lost, is hard to regain. The world would not soon forget the lessons of the sell-off, and the path to restoring confidence would be long and uncertain. Was China weaponizing its US debt? The debate is fierce. Some experts say the timing and scale were no accident. China wanted to inflict maximum pain and force a US retreat. The move was seen as a warning. US financial dominance can be challenged. Others argue China risked hurting itself, as a weaker dollar and falling bond prices damage its own reserves. They point to hedge funds and market structure as accelerants of the crisis. China may have lit the match, but the fire spread because of a fragile, leveraged system. The truth: the sell-off was both a strategic move and a symptom of deeper market vulnerabilities. Economic warfare and market fragility collided. The result: a crisis that exposed the risks of weaponized finance. The world is now on alert. The Treasury sell-off sent shockwaves through global markets. US borrowing costs soared, straining the federal budget and raising rates for consumers and businesses. The risk-free asset was suddenly risky, forcing a global repricing of everything. Investors fled to new safe havens, and trust in US economic leadership eroded. The crisis accelerated efforts by countries like China and Russia to build alternatives to the dollar. Market volatility spiked as traders now had to factor in the risk of financial weapons. The world saw how quickly geopolitics could destabilize markets. America's reputation as a stable anchor was damaged. The global financial order, built on US dominance, now looked fragile. The lesson: in a connected world, financial tremors anywhere can shake the entire system. The future of global finance is more uncertain than ever. The rules have changed. The sell-off's impact wasn't just on Wall Street, it hit Main Street too. Higher interest rates made mortgages, car loans, and credit card debt more expensive for families. Small businesses faced higher borrowing costs, slowing hiring and investment. Retirement savings took a hit as both stocks and bonds fell. For those near retirement, plans were upended. Globally, a weaker dollar fueled inflation and eroded the value of foreign reserves. The economic slowdown rippled from the US to exporters worldwide. The lesson: financial shocks in one country can affect everyone, everywhere. In 2025, the world learned just how interconnected and vulnerable we all are. Experts are divided on what the sell-off means. Some, like Treasury Secretary Besant, downplay China's intent, blaming market structure and hedge fund trades. Others, like Chen Zhao, call it economic warfare, timed, targeted, and effective. A middle view sees a perfect storm: China's selling, hedge fund unwinding, and bond vigilantes protesting U.S. policy. The consensus? The crisis was a vote of no confidence in U.S. economic leadership. It exposed deep vulnerabilities in both policy and market structure. The world is now watching Washington and Beijing more closely than ever. The next move could reshape global finance. The stakes have never been higher. The era of easy assumptions is over. The April 2025 sell-off changed the world. The era of unquestioned U.S. financial dominance is over. Countries are accelerating efforts to reduce reliance on the dollar and diversify reserves. The U.S. must now rebuild trust and pursue more stable, predictable policies. The crisis exposed the costs of aggressive, unpredictable actions. America's exorbitant privilege is eroding. The global order is shifting, shaped by great power competition. April 2025 was not an isolated event. It's a sign of things to come. Navigating this new reality requires vigilance and understanding. The connections between politics, finance, and daily life have never been clearer. The world is more complex, less predictable. The ground beneath our feet is shifting. The future of global finance is being rewritten right now.